Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. If you like looking for undervalued assets and having someone help you do that, that's what this channel is about. It's about helping everyone with financial education and me presenting cases of undervalued assets and investments that you could potentially partake in. Obviously, I can't give advice. That's not what this channel is about. It's about financial education. If that interests you, subscribe to the channel. Give me a thumbs up for the content. And let me know any questions or concerns that you guys have in the comment section. So I'm going to go over platinum. This is going to be a pretty good presentation, I think, because I'm going to touch on what I look for as an investor, and I'm going to go over a presentation that was given in London a few days ago. And we're going to go through the presentation and show you demand, supply, market balance, and what's coming up. So let's jump in here. This is the platinum presentation and show you kind of what I did in history. So they say kings hold gold, and then I say that gods hold platinum then. Historical ratios and how platinum is cheap. Platinum is outperforming other metals, signaling inflation and signaling platinum is the investment choice. I'm going to go through all of that. And I'm going to cover a presentation recently presented in London. So this is the correlation of real and financial assets with inflation since 1950. And we've got real assets, commodities, and we've got platinum here. One thing I want to touch on here is if platinum and commodities are better inflation protected assets than gold, which it is. If you plot these in a ratio, if you do platinum to gold ratio or a commodity to gold like copper, oil, something like that, what we're going to see is that copper, platinum, and oil will outperform gold, which means those ratios will move in favor of the commodities and platinum. And that's exactly what we're seeing. So we already have inflation, and the trend is already set in place, and we're seeing it across all of the commodities and especially subsets of the commodities. So we do have inflation, and we want to be positioned in the assets that will perform better than gold. That gives us leverage to the gold price. Platinum is one of those things, and that's what I'm talking about today. So this is, if you're an investor, you need to know the cost curves, because you can find opportunities in life where you can buy the physical metal for cheaper than what the companies can actually produce it. Here's the high cost producers on the right-hand side, low cost producers in the green. This is the all-in sustainable cost of the mines, and this is the annual production on the bottom. And you can see that the mid-tier producers in here, it's about $800. So if you could buy it under $800, you are getting an absolute steal, because you're buying the platinum under the cost of the mid-cost producers, which is quite rare. In 2020, it got all the way down to the 600s, which is an absolute steal, because if you know that it costs $800 on average to, the average cost is $884 right here in 2018. If you know that it costs $884 and you can buy it for less than $884, you're going to make money. It's just a matter of time. And this is the South African platinum mine costs. They produce roughly 75 to 80% of platinum in the world. This is the platinum to gold ratio. I just want to show you this. Anything under 1 is an absolute steal for platinum in relationship to gold. So you want to buy platinum when it's under 1. Now, the reasoning, why is it under 1? Well, there's probably a billion reasons. Maybe I'm not buying it if it's not under 1, and all the other investors. Maybe people who are buying jewelry prefer platinum over gold when it goes under 1, which means that platinum is cheaper on a 1-to-1 relationship to gold. There's many, many, many reasons why. But what we want to know is what are the correlations and what is the trends of history. And if it's below 1, that means that people prefer to buy platinum over gold when it's under 1 for jewelry or for whatever reason it is. This is when we pile in. Right now, this is the real platinum to gold ratio, and it's at 0.7. I circled down here. This is when I swapped my gold for platinum. So I swapped it all during that crash. Everyone was in a frenzy. They sold off platinum very hard. They sold off silver as well. Gold is a much more stable metal in relationship to platinum and silver. So I wanted to swap it into a higher risk or a more leveraged bet physical metal. So I swapped it to platinum. That was my swap. And you can see this downtrend line is breaking in favor of platinum, which means that platinum's coming out of this downtrend, which means it's going to outperform in the future, most likely. Oh, and we're at 0.7, and given the history, we're right very super low in relationship to history. It's still a very good buy. Very, very good buy, in my opinion. Now here's platinum to palladium, two downtrend lines. It broke out of the first downtrend line here. I swapped my palladium for platinum right here. I did that because you could have 3 platinum ounces to 1 palladium ounce. And in history, it's been reversed. It's 1 platinum to 3 palladium. So this is a very rare anomaly in history of time. And the automotive sector is going to be massively swapping their palladium to platinum in their catalytic converters where possible. So I'm going to go to the presentation here. I just popped out. The presentation is here. I'm going to go all the way to the top. So this is the platinum quarterly presentation, Q4 2020. This is the London, was given in London on the March 10th. So if we scroll down here, Trevor Rabin, he's pretty well known if you follow platinum. He's an analyst. So I think he gave a lot of this presentation. So I'm going to go down. Just high level on the supply side. So total supply down 15% on ACP outage despite recycling supply recovery. So we were total Q4 supply down 15% for last year, minus 326,000 ounces. This is the South African mine supply was down 27% year over year and 18% quarter over quarter on continued ACP issues. That's ACP converter phase B shut in early November. ACP converter phase A restarted ahead of schedule in early December. That's why production was down there. But I'm going to kind of roll through this real quick. Recycling was up. We were down market deficit of 170,000 ounces here in the auto, jewelry, and industrial recovering. So industrial uses are going way up. Industrial was up 43%. Investment was up 63%. Automotive was up 5%. This is the automotive sector. You can see it's heading on up, greater 5%. Come on down. Q4 2020, jewelry up 7% year over year. Keep in mind that platinum is cheaper than gold, so people may prefer platinum over gold. I would especially prefer it if it were me. Industrial demand up 43% year over year on strong glass demand. So this is other medical and biomedical glass, electrical, petroleum, and chemical. Huge. I mean, the trend here is going up. If you look, take out the COVID shutdown, this trend is a strong uptrend over time. We've got investment demand, that's up. You can see the investors have been piling in 2018, 2019, quite a bit in here. I was a huge buyer all through here. I was a huge buyer. Going down, deeper deficit, minus 932,000 ounces on supply losses, record investment demand. Big deficit. Above ground stocks are getting eaten into. Only it's in thousands of ounces. Yes, 2.6 million ounces. Total supply down 17%. Total demand down 7% given last year. Forecast third consecutive deficit of minus 60,000 ounces despite supply and demand recovery. So we're still projecting above ground stocks to be eaten into. I'm going to go past some of this here. Just going to scroll down. So sustained platinum market deficit. 2021 forecast to be third consecutive deficit. Massive deficits here. The largest 2020 largest platinum deficit on record. Look at that deficit here. Eclipsing everything. We're getting massive deficits here from 2000 onward for the most part. We had couple supply increases here, but it's been living in the deficits, eating up inventory. 2020 platinum market deficit of minus 932,000 ounces, largest on record, including the NYMEX. 3 consecutive quarterly deficits. Market deficits driven by constrained supply, recovery in automotive, jewelry, and industrial demand, strong investment demand. Because of those ratios that you guys are learning on this channel. That's why people are preferring this metal. We've got China imports are surging 23% in 2020 to 2.8 million ounces. 20 shortages, strong demand growth. We've got platinum above ground stock levels at historic lows, supportive of higher platinum prices. You can see the lows are right down here, way lower than history. And these are going to continue to go down. And we've got some red box anomalies where we have a inventory being drawn down, but the price was continuing to go down. So I think we have a historic anomaly here, a huge opportunity for an investor. And again, this is the palladium price down here. We've got low relative to palladium AGS, modest compared to current and potential future platinum demand. Platinum, they're going to ramp platinum up because platinum's the cheaper metal of platinum and palladium. So when substitutes can occur, they're going to substitute palladium for platinum. And they're going to do that, and we can show that here. Strong platinum price rise since November 2020, but historic disconnect with gold and still undervalued. Here's the platinum price. This is palladium and gold. If you look at history, we've got a platinum price being far higher than gold and way higher than palladium down here. See the historic difference? This is more of the norm of history back here. This is a rare anomaly. This is a super rare anomaly here. This is going to be moonshot to the upside, I think, to get more of a balance that looks something like this over here. Long lead platinum mine supply response more widely noted. No meaningful growth in the next 4 years. Look at 2006. This is the South African platinum mine supply. It increased rapidly to 2006, and now we're heading down and down and down. Global mining capex spends remain depressed because in order for South Africa, if you do some analysis and look into it, it's going to take a ton of money to really be dumped into these platinum mines to get any sort of growth out of platinum. Because one, they're going to have to offset this decline to bring it back up. Then they have to invest even more on some new mines if they have it, if they can even do it, to raise production over the 2006 peak. And I don't know if they can. This is the long lead mine supply response. Siboney Stillwater Platinum 4-year outlook, flat. They're not expecting to increase production. And you can see the SA PGM operations capital has been going up. Capital expenditures are going up, and their production is remaining flat. Same with the long lead mine supply response from Anglo American Platinum, which is one of the largest producers of platinum. 3-year outlook, flat. Expenditures up, production flat. China jewelry and automotive demand has been going up. And I think they have a forecast down here. This one in total, strong Chinese demand, it's coming on up since 2019. That's looking good if you're a platinum investor. Increased certainty of hydrogen economy, key to achieving carbon neutrality and now funded. Look at what we got here. This is the PEM electrolyzer capacity projections. Here, we're right here, which is nothing, and then it just ramps like heck. Just ramps like heck. This is USA, EU, and China. They're all looking to do it. More than 200 green hydrogen projects already announced. Green hydrogen is key to global decarbonization, could supply up to 25% of the world's energy needs by 2050. Lower cost hydrogen to drive acceleration of fuel cell electric vehicle volume growth. Increasingly strong case for 5% fuel cell electric vehicle over 10 years as hydrogen costs fall. So the hydrogen costs are falling, and this is what they project. An absolute moonshot over the next 8 years, 5 years. I mean, it's just going to keep growing and growing. The battery electric vehicle market share at 3.2% after 9 years. This is increasingly strong case for 5% fuel cell electric vehicles over 10 years. Anglo American Platinum view by 2035. Look at the demand on the right-hand side here, guys. This is insane. Boom! 6 million ounces to 2035. This one is a few million ounces here. So it's like 2 million to 6 million. I don't think we can even produce that. I don't think we can double the... So the total supply of all of the platinum in the world is 6 million ounces. They're asking us to double the platinum supply in a very short time frame. I don't think that's possible. I think prices are going to have to go to ludicrous amounts. Strong case for annual platinum demand from electrolyzers and fuel cell electric vehicles. By 2030, this is the base case, I think, is about 2 million more ounces. 2 million is a substantial amount given that we're at a supply of only 6 million now. Demand projections look conservative as global policy and spending plans continue to grow as they evolve. Substitution to add over 1.5 million ounces of annual automotive platinum demand from 2025 onwards. And what they're talking about is this down here. 4,000 ounces of platinum for palladium substitution annually by 2022, and then another 1.5 million ounces substitution annually by 2025. They have problems with palladium. Rhodium's through the roof. That's up around $28,000 an ounce. Palladium is going up $2,500 an ounce. And then people are swapping to platinum because it's cheaper, but it won't be cheaper for long. That's my guess, because everyone's going to start pummeling into platinum because it is cheaper, because of the ratios. Substitution to add over 1.5 million ounces of the annual automotive demand from 2025, says Siboney Stillwater. Look at this. Platinum's fortune set to turn. The platinum market balance. Little deficit. We've got a little surplus, little deficit, big surplus here. And then we go massive into deficit by 2025. And it's a growing deficit. So we may have a little bit more time to accumulate this over the next 2 years. Maybe. Remember, this right here it probably doesn't have a bunch of investment demand here. So this is the time to be picking it up over the next year or two, because it's just going to go massively down in terms of market balance. Big deficits. Primary platinum supply expected to fall by 225,000 ounces by 2025 because of underinvestment, South Africa. Recycling to grow by 23% over this period. Increased gross autocatalyst demand from 2.7 million ounces in 2019 to 4.5 million ounces in 2025, largely due to substitution in gasoline autocatalysts. Net jewelry demand growth of 4% per annum. Platinum to move into deficit from 2024. Longer-term potential demand from the green economy afterwards. Substitution to add over 1.5 million ounces of platinum demand. This is why I invest in platinum. Platinum remains undervalued compared to gold and palladium, given the ratios, and I showed you that. Supply is constrained severely over the next 4 years, comforting long-term demand growth and strategic role in hydrogen economy. Steady demand growth from jewelry and industrial demand over near term. Significant near-term annual demand growth from substitution for palladium each year. Short and long-term platinum outlook driving significant additional investment demand, material to price discovery. And that's the end of this presentation. So guys, this we've got, when the ratios are low, what it does is people will automatically go to the cheaper option. Gold expensive, platinum, jewelry, I want platinum. So people are making that choice because it's cheaper. When you've got industrial users and they say, look, I've got palladium here, or I could use platinum. Platinum's is less than half the cost. I'm going to choose platinum. So these ratios are telling us what consumers would just naturally choose over time if they have an option to choose. So as an investor, I saw this, I jumped on it. I am jumping on it. And I continue to cost average into platinum because I think it is the superior physical precious metal to hold. And I think the opportunities in platinum are absolutely incredible because of the potential demand and because of the current demand and what the current demand is growing and what the potential demand could be. So the demand in industrial sector and auto catalysts are continuing to grow. And then you got the fuel cell portion, which is just going to pile on later on. And then you have all the substitution in the background where people are they're going to have to substitute palladium to platinum because palladium's running into massive deficits. They just don't have it. So they're going to have to go to platinum, and then that's going to drive platinum into massive market deficits over time. So now's the time, I think, to pick this stuff up. That's what I'm doing. You guys can do whatever you want, but this is the information. I just wanted to make sure that everybody knows this information so they can make good financial, educated decisions about what they want to do with their money. Thanks for listening. Subscribe to the channel if you haven't. Leave any comments below and give me a thumbs up for this content. Thank you. This is Finding Value.